Hey everyone, welcome back. Here's your quick 2-minute market brief. And today it's all about the US Fed. The US Federal Reserve has kept interest rates unchanged at 3.5% to 3.75% for the third straight time. And honestly, this wasn't a surprise. But here's what actually matters. The reason behind this pause is still high inflation and the rising global risks, especially with oil prices climbing due to geopolitical tensions. Now, why you should care sitting in India? Because US interest rates directly influence foreign money flows, the rupee, and overall market sentiment. First, no rate cut is equal to no big liquidity boost. Markets were hoping for rate cuts in 2026. That now looks delayed. So don't expect a flood of foreign money into Indian equities just yet. Second, short-term impact mostly neutral. Since this move was already expected, Indian markets may not react sharply immediately. Third, but volatility isn't going anywhere. The Fed is clearly in wait and watch mode, and even policymakers are divided, which means uncertainty ahead. And fourth, watch oil and inflation closely. If oil prices stay high, inflation could rise globally, and that could delay rate cuts even further. So what's the takeaway? In the short term, Indian markets stay stable. But in the medium term, everything depends on when the Fed actually start cutting rates. Because when that happens, that's when global liquidity returns and emerging markets like India could benefit big. Until then, expect a market that's cautious, not bullish. Thanks for tuning in. I'll catch you next time.